Good day all. Ira Epstein with your SPDR ETF wrap-up for this Wednesday, the 22nd of January, 2020, just after 4:30 p.m. Central Time. So the event of the day, we're all very nervous now in hearing about what's going on with the Wuhan corona, I said that wrong, coronavirus. This is it's exponentially spreading. We're up now, and this was this morning's numbers, to 17 dead worldwide and 540 cases. This started off just a week ago with a few cases, wondering if it came just from pigs in an area of Wuhan to people, and that's what they first thought. Now they're proving it can be transmitted person to person and an animal to a person. I had written in my newsletter, for those of you that get it last night before this event happened, and of today, of a quarantine. I said it's just a matter of time. Well, today, airplane travel, train travel, you're not getting from the airport to the city or from the city to the airports or train stations. They're shutting everything down in Wuhan. I'm waiting next for the car travel. That should be shut off. There's 11 million people in that city alone. So try to imagine the size. You've got to contain that. The World Health Organization has people on the ground there trying to figure out how bad this is. And it starts off like a cold or the flu, and then it quickly escalates. It doesn't kill a large percentage of the people, but I don't know, 17 out of 540 to me, the numbers there, what, a couple of percentage points of that's nerve-wracking in itself. So I think the market is looking at that, and I can tell you in the energies complex, the metal complex, it's looking to see what goes on. We have earnings that have come out, good ones, in a number of microchips and so on. The market itself is still looking okay, but you're getting this outside influence. When I look at the technology sector, SPDR, XLK, still up and away. And when we add to it just the swing line, you can see you've had a clear pattern of higher lows, higher highs. That's bullish until you take out this 94.87 level. When I add moving averages, and I've first got on the 18-day moving average of closes and then the 100-day, they're bullish. But to get back to this number for support, you'd have to take out 94.87. That doesn't mean you have to do that, but I'm saying that's where it's at. When I put on the resistance of the upper Bollinger Band, you're fighting at that number. You just keep hitting it. It is here, believe me. That black number dashed is right there. You keep hitting it. Eventually, you pull away from it. Now, you could go into a vertical move, but you'd really need something powerful to make that happen. It's easier to get a correction. What's the most important part of this chart? The momentum, since it's locked in. This is called an embedded reading. It's when the slow stochastic indicator, that in the traditional way of looking at it, the market gets overbought over 80, oversold under 20. I have my own twists and turns on it. And when you get both numbers that stay over 80, like this is done, that's a sign of strength. If the red line gets under 80, I look for price to run towards the 18-day average of closes, which would be to the downside. It hasn't done it. It's not showing any sign. And until it does, on the pullbacks, I think this market is bought by the pros. When I look at the industrial sector, the XLI SPDR, you fell back to where? If you look at today's lows, 82.98. The 18-day average is the line in the sand. What else happened? Because we should be able to go back here, and I do want to show something. Here is that embedded reading. Yesterday, the market loses that reading. Unless it gets it back right away, the odds are very strong. I'm not going to say the word always, very strong, that price and this 18-day average are going to work towards each other again. That's what the market's trying to do. Are we trending right now? No. You have a higher high and low. You have upside bias, but you have downside momentum. So the market's gone into a state of a correction. The energy sector, you can look at my futures charts to see how bearish this has been, and it's been this way for a while. Lower highs, lower lows, you've stayed. Since the beginning of the year, you basically got underneath that 18-day average, giving the market downside bias. This break low I'm pointing to is the lower low, and each rally has been met with resistance. Now, when I do my afternoon SPDR ETF video. I put more numbers on these charts than you're seeing. I don't do them here. And I'm saying buy here, sell there in that video. I put it out today. I think 3:30 I recorded it this afternoon. It's already been posted. You can get and try it for free. If you go to our website under free offers, it's on the bottom right at www.iraepstein.com. Sign up for it. Click that. We'll make sure it gets in your hands. The access codes to get into it daily. But you're under the lower Bollinger Band, so you're getting ahead of yourself. What about embedded readings? Well, both numbers are under 20, so that's the first stage of it. Let me come here and back, and now it'll work for me. Day before, both under 20, and the day before, you're embedded. So until the red line gets over 20, good rallies in this market, what do you think I think the pros are going to do? I think they're going to be sellers on the rallies in this market. When we come to QQQ, you have the embedded reading. Therefore, until you lose it, I'm a broken record. I expect the pros to keep buying the market. And there are numbers here on these pullbacks that make sense for the pros. We'll see where they come in, but right now, I'm still in the bull camp. When we come to the emerging market, one of my first ones, I'm adding a new chart on this too. You can see how the market's gone higher high. It's trying the lower low, but you're overbought. This is a market that's caught right here. Now, so many people think that the emerging market play is going to happen this year. Is this going to be a longer-term base that the market's going to break out of? Is a question that I have in the back of my mind. The market right now pretty neutral as I see it. And if you go to my SPDR ETF, I've added another chart for you on that. One of our viewers, if you write me on YouTube, we look at that, and sometimes I'll decide to do some of those charts and add them. In GLD, higher high, lower low. What's the amazing thing on this chart? It's refusing to get back under this 18-day average since early December. So the bias of this market is up. It has just worked, past tense, itself out of being overbought, and I think the market's looking for reasons to have another move. Now the question is it going to set up a pattern of higher lows, higher highs, or just decide to meander here? And that's what you're doing. You're just meandering sideways. When we come to the gold miners, you're stuck at the 18-day average of closes. You've heard me tell you that's the line in the sand. When you come down from way above it, it's often a deciding factor. Get under it, come back up. It's often a resistance, a deciding factor. What's going to be next? It's the same thing in the full-size one. These markets aren't trending just yet there. In TLT, I was looking yesterday. And let's come back so I can come to this. Sometimes I have to restart the computer to get that the right way. But look at the combination of the upper Bollinger Band, 140 to 139.88. Now, that'll change when the market reopens because the numbers are live. They're going to adjust. But that's still the resistance zone in an overbought market. You got right into it and you ran into a brick wall today. That's what I'd expect. Are we trending in the market? No, you got a lower and low, higher high. I understand the nervousness of the market with what's going on in impeachment, what's going on with this coronavirus, but, the word is but, the economic data so far hasn't scared the market off. When we come to the energy part, look at this. You fell today. This is, again, I want to come here for yesterday. There we go. That'll let me do it. So here we are, and this is Tuesday. If you fall, one of the numbers that I'd look for if you fall is the combination support at the lower Bollinger Band and the 100-day average. Get down there. I know what I'd be telling my clients. I'm looking for big support at that number. That's where you went today. I'd tell them the same thing. That doesn't mean you can't go lower. This is where the play of taking money off the table, I think, comes in. In FXE, you're still bearish. This is the euro versus the dollar. Lower highs, lower lows. I'm looking for support between 104.83 and 105.04. You got to 104.88 today, finished 105.07. I am not bullish, but I have reasons to no longer be in the bear camp down under that number. So you put it together, you try to come up with game plans, and I try to really give them to you at the end of the day. So at 3:30 in the afternoon on my website, we have, and you need a user ID and password. I'm covering a lot more charts than these. I'm covering all these that you see behind me, plus. And I'm telling you what I see in each one, where I think you buy, where you sell. And there's not a recommendation every day, but there's plenty of recs there. And I'm able to say in that video, buy here, sell there. You want to try it? Go to our website. If you're not a paid subscriber of mine already, okay. Go to the free offerings part. You're going to see, if you click on it at the bottom right, it'll open up to a page. It's going to say Ira's free offer. The very first one is our SPDR ETF. Sign up for that. No charge. You can take a look at it for a bit. You can click here. If you see the icon on YouTube, that'll take you there too. I'm Ira Epstein. You have a great day. I'll see you all tomorrow.